Hi everybody, this is Scott Miller with River City Mortgage and Financial, and welcome to this week's Market Minute for the week of July 27th, 2009. Well, I have a little personal information. I have to just let you, we made it. Yesterday was the 18th birthday of our twin boys, and when you reflect a little bit on that, I guess the 18 years went by a lot faster. We were looking at some pictures and things like that, and it's amazing how much younger I looked back then. I didn't think I really had aged that much, but holy cow, the gray you're seeing here was really a problem that I had. I tried to lighten it up for the summer, and it turned gray. How goofy is that? But anyway, thanks for tuning in today. A lot of stuff going on this week, and typically the end of the month, there's not a lot of data that's coming out that really impacts the market. This morning, the new home sales came out. Up 11%. They were expected to be up 1.7, and they were up 11%, a huge jump. So the bond market opened up a little bit down. When the bonds are down, interest rates are up, and they've recovered since then, so they're doing a little bit better. And if you also go back, and I wish I could tell you the exact date in the other videos, however, we did talk about a roller coaster and the roller coaster ride that we're on. Right now we have, or coming up, we have the 2, 5, and 7 year Treasury auctions going on. And the Treasury auction, the demand for our debt is going to really have a big impact this week on our interest rates. So really be cautious right there. Remember, we provide this information for our customers, which include our professional realtors and trusted financial advisors. We're asking those realtors and advisors to pass this along to their customers to help you guys make better decisions on locking or floating or on just interest rate environment with your mortgage. We want you to thank your people that are referring you to this by referring your friends, family, and work associates. Right now, short term, if you're going to be closing in the next 30 days, I would probably recommend locking in. Rates are you're not going to gain a whole lot, and if it goes up a little bit, you have a short period of time for those rates to improve. So I'd recommend to our clients to lock in a short 30-day window. If you're out more than 30 days, we will have the beginning part of August. The first couple weeks are jam-packed with economic data, and we're going to see if that's going to show the economy going up or down, and probably give some direction to it. And there, it's setting a tolerance for what rate you're willing to take. And if the rate's below that, then maybe gauge to float day at a time. If the rates hit that point where you are no longer accept the risk, then lock that in and don't look back. No matter what, you're not going to be right. If you lock in, rates go down. If you don't lock, rates will go up. It's kind of that's just what happens. Otherwise, that's what's going on. If you have any questions, we want to be your lender. You can reach me at 763-509-7400, or our email address is smiller@rcmortgage.com. A side note, look for starting August 3rd, we're going to have our $5 million challenge, and this is all about really trying to put a stimulus for Minnesota, or more specifically the Twin City area. For the first-time home buyers, take advantage of your tax credit that's out there. We need to really benefit. The end of November, that goes away. $8,000 free, no payback, nothing. Call me for the details on that, but look for our billboards, look for seminars in your area, and if you're not a first-time home buyer but know somebody, please forward them this link. Thanks very much. Take care. Have a great day.